Hello, everyone, and welcome to today's episode. My name is Trisha, and it's a pleasure to welcome you to our market podcast. On behalf of Saigal Seatrade, I'd like to extend a warm welcome to all our participants and listeners. For those new to Saigal Seatrade, we are one of India's largest and most prominent shipbrokers and maritime consultants. Our team consists of over 100 dedicated professionals specializing in dry bulk and tanker markets. With offices in Delhi, Mumbai, and Ahmedabad, we provide our clients with regional support and are available through phone, email, and social media. So, in addition, we have a specialized research department that collaborates closely with Indian stakeholders across shipping and commodity sectors. Our team offers timely, in depth market insights through weekly and monthly reports, which are available to anyone interested. Just reach out to us. So, the topic of podcast is Trump's new energy policies, the changing landscape of oil and gas. We are diving into the impact of President Trump's recent election win and the major shifts his energy policies may bring to the oil and the gas industry. My colleague Sandesh is here to help break down these potential changes. Sandesh, welcome.
Thank you, Trisha. I am excited to discuss these critical issues, especially with so many changes coming to the global energy market in the next few years.
Trump's new term promises some bold moves in oil production, refining, and international supply chains. So let's start with some basics. What are some specific ways Trump's new policies are expected to increase US oil production?
Trump's new policies are definitely leaning towards increased US oil production. One of the first things we are seeing is a shift in how oil companies can access federal lands. Trump's administration has made it clear that they want to remove barriers that have slowed down development in the past, especially on federal lands, and he is looking at reducing or possibly waiving royalties for companies drilling on these lands. I think which is a huge move. This would incentivize companies to move ahead with the projects that were previously delayed, and they were delayed due to high regulatory cost or the complexity of the permitting process. I would like to mention another impact or another impacting fact, uh, that his support for infrastructure projects like the Keystone XL pipeline, which will always have a significant impact in US oil and gas energy industry. This pipeline would allow the US to import more Canadian crude, which is a massive source of oil, and send it to the US refineries. That's an important piece of the puzzle because if you see, it is not only boost domestic supply, but it also helps stabilize the overall market by increasing access to crude that's relatively close to home. And on the top of that, Trump has been focused on cutting red tape in general by fast tracking approvals for things like pipelines and reducing the time it takes to get permits for new oil drilling projects. We might see companies jumping at the chance to develop new resources faster than we have seen in previous years. Uh, for an example, if I have to say, reducing permitting timelines means that exploration and production can move at a quicker pace, which could result in significant uptick in production. Uh, but having said that, it's not just about increasing production in the US. Trump's vision is also about the energy independence, and he has spoken a lot in his recent election campaign. The idea is to make the US less reliant on foreign oil, not just by drilling more domestically, but also by supporting the development of natural gas. With this support or with this focus on domestic production, the US would be in a position to produce more of its energy needs, including both crude oil and natural gas. But there is another aspect to it also. While the surge in supply sounds promising, it also comes with some risks. A massive increase in oil production could definitely flood the market, but potentially driving prices down. I mean, not just a US, but also for global. For US producers, this presents a bit of a double-edged sword, one in one hand and other in other hand. The cheaper oil could drive demand and make US exports more competitive. On the other hand, if oil prices fall too low, it could hurt the profitability of domestic production. Many US producers have a price threshold they need to meet to stay profitable. So if prices drop too much, it could become more difficult for them to operate efficiently. And so while Trump's policy are clearly aimed at increasing production and making the US more energy independent, the market dynamics are complex, and these changes could lead to both positive opportunities and significant challenges for producer. It's definitely something to keep an eye on as the years go by.
Right. So, how will this focus on drill baby drill affect US crude oil producers?
Uh, he has said a lot of times this drill baby drill sentence during his campaign. So basically, this policy can be a double-edged sword for US crude producer. The reduced restrictions on and lower cost could boost the production, that is shale oil production, and this could potentially increase cash flow in the short term. But here is the issue. Okay, first, not all crude is created equal. What does that mean? The kind of oil that comes out of US shale field is primary light sweet crude. This is not compatible with the design of many refineries, particularly those in the Gulf Coast, which are optimized for heavier crude. So while the policy encourage more drilling, the reality is that refineries can't process unlimited quantities of this lighter oil without modifying their setups. And it is a costly process that many refiners aren't willing or able to undertake. Uh, Other thing I like to mention that if too much light crude enters in the market, especially at a time when global demand isn't growing significantly, US producers may face declining prices. Light sweet crude could become cheaper than what's economically viable for this producer. These producers need a higher price per barrel to cover their cost, because cost is very important for US oil producer. And if that happens, US producers may struggle to stay competitive, especially if they are up against countries like Saudi Arabia that have much lower production cost. So while policy may sound great for now for the production code, it risks putting smaller producers in a tough financial position if prices fall too much.
Very rightly said. So, with more Canadian and Venezuelan crude expected in the market, what do you think? Like, could this mean for global oil prices?
The introduction of more Canadian and Venezuelan oil could significantly alter the global oil landscape, especially in the shorter term. But what I think is Canadian crude, particularly those are the heavier grades, complements many US refinery well. So it's likely we'll see increased imports from Canada with approval of Keystone XL pipeline. And additionally, if sanctions on Venezuela are lifted or reduced, their production capacity could come back online. And then it would entirely result even more heavy crude to the global mix. What I expect is by 2028, uh, some of the, I mean, not just me, but some others also are predicting that a supply surplus as a countries ramp up production in response to ease regulation and political shift, the crude oil will be very, very higher in terms of supply, and that will happen in 2028 unless there will be massive global policy shifts. But for right now, the global market could become saturated, particularly with crude grades that are the in direct competition with US light sweet crude. And when we talk about the future, this would push prices down, creating market environment that could be challenging for high cost producers like those in the US shale sector. For the consumer point of view, this could mean lower prices at the pump, but for the industry, it could trigger a survival of the fittest scenario where only the most efficient, low cost producers are able to thrive.
Right. So, Trump's administration is focused on reducing costs for oil companies. So, how do you think this could impact cash flows and like overall strategies for these companies?
Reducing regulatory burdens can be highly beneficial for oil companies, especially in the terms of improving cash flow. But by cutting the compliance cost and making permitting simpler, companies have more capital to allocate, and this allocation will go towards production or expansion. Now, this extra cash flow at the same time can lead to higher net present value for these assets. And ultimately it will increases the company's overall market valuation and attractiveness to investors. But however, instead of investing in new drilling, many companies may prefer mergers and acquisition because it is also another fundamental that can company can grow. Through M&A, companies can gain access to reserves without taking on the high upfront cost associated with new drilling projects. This is specifically relevant for US shale companies, where short production cycles allow them to quickly ramp up or shut down wells based on the market condition. Additionally, if I have to say in basin consolidation, that means if one producer is working two different basins or two different producer work in the same basin, the merging of nearby producer provides further efficiency, and this will allow companies to optimize infrastructure. At the same time, they can also lower the transportation cost. Altogether, Trump's policies may encourage companies to become more strategic, focusing on acquisition and operational efficiency rather than just expanding the production.
Very rightly said. Now, given the specific needs of refiners, how will Trump's policies align with refinery requirements, especially regarding crude quality?
It's a right question. Refineries are complex facilities and those are designed to handle specific types of crude. Uh, if I have to say, many Gulf Coast refineries were built to process heavier sour crudes from the sources like Venezuela or the Middle East because they have built in the past. They are older. Light sweet crude, such as US shale oil, produces higher volumes or lighter products like gasoline and naphtha, but less diesels and fuel oil. And this is exactly which some refineries need. So running too much light crude can disrupt operations, but at the same time it increases pressure in the distillation column and it will impact the overall efficiency of the refinery. Now, in similar way, to process more US light sweet crude, refineries would need costly upgrades, which many operators are hesitant to undertake, especially given the uncertainty in the global oil demand. This means much of US light sweet crude surplus will need to be exported. Now, competing with the similar grades from West Africa and other regions, it will be a complicated issue with respect to product competency and prices. Now, if Trump's policy lead to the production boom, but refineries can't handle the added volume, we might see a situation where there is an oversupply of US crude and thus it can put a, let's say, downward pressure on prices, and then it challenges the profitability of domestic producers.
Right, I agree. Now, if we were to talk about the supply market, how do you think Trump's policies might impact the global oil supply dynamics?
uh, it's again kind of a tricky question, but it's if the US significantly increase its oil output, we could see some ripple effect in the strategies of major oil producing countries. Now we know that oil market is driven by OPEC plus, and that's why I'm speaking from the perspective of OPEC plus. For example, OPEC plus may choose to unwind its production cuts more rapidly in response to rising US supply. So what will impact this will or this supply cuts could lead to a market with abundant supply but softer prices, and that could trigger a potential price war. We have seen such price war in the past, but some analysts also predict that under this scenario, oil prices could drop close to $40 per barrel by 2025. Now, if dropping those prices in the oil, specifically for the US crude oil prices, it could put pressure on US shell producer itself because their production cost is bit higher than their counterparts who are OPEC plus countries. Now, in such a scenario, this would also impact global investment in new oil projects because lower prices might discourage exploration, especially in high cost regions, leading to the gradual shift where only the most economically efficient producers remain to active. So while Trump's policies are designed to boost US output, they might lead to a crowded market with countries competing more aggressively for the market share.
Right, very rightly said and well said. Lastly, what impact do you think Trump's administration might have on energy infrastructure, such as pipelines and export facilities?
Well, Trump's administration is expected to focus on bolstering energy infrastructure, which I also said in the at the start of our podcast. And this is particularly by supporting pipeline projects and export terminals. Now, expanding the export facilities on the Gulf Coast, for example, could make it easier to ship US crude to international market, right? And this is crucial given the potential oversupply. Now, by fast tracking this project, Trump aims to create a more efficient supply chain, specifically for US producers. And this can ultimately reducing the bottlenecks that currently limit how quickly US oil can reach global buyers. And moreover, new infrastructure could help the US capitalize on its natural gas resources as well, with additional LNG export terminal facilities export to Europe and Asia. This infrastructure expansion could also bolster domestic economic activity, and this by creating jobs in construction and maintenance and like that. However, it's a balancing act. That's what I think. While infrastructure expansion is beneficial for exports, it's also a long term investment and it requires sustained demand to justify the cost because you know that LNG export terminals and infrastructure cost is very, very high. So, if global demand doesn't grow as anticipated, some of these projects could face financial challenges down the line.
Thank you, Sandesh. This has been a fascinating look at how Trump's policies could reshape the energy market. I guess we'll have to wait and see how this all plays out over the next few years. Thanks for joining us, and thank you all for tuning in.
Thanks, Trisha. I look forward to seeing how these policies unfold, and there is definitely a lot at a stake for the industry. Thank you, Trisha.